What is a cryptocurrency index fund? Cryptocurrency index funds are ways for curious investors to gain exposure to crypto assets without having to invest and hold a particular coin or token. Here's everything that you need to know about this growing trend among investors. The crypto index fund is a type of index fund, which is a type of mutual fund for crypto investing. In other words, it's an investment portfolio designed to provide a wide market overview at a low cost. This translates to passive investment for long-term gains, not day trading. Different types of funds, active versus passive management. There are two types of crypto index funds, active or passive. Active ones actively trade cryptos, while passive ones hold or HODL certain coins and tokens on your behalf. Next, those that list all versus like cryptocurrencies. Most cryptocurrency index funds only invest in the highest market cap coins and tokens, though some capture the whole market. The way they choose tokens differs too. For example, how do they take the market cap, liquidity, and price into account? Manual versus automated. Some crypto index funds have the option to manually select and weigh each cryptocurrency. Others will create a basket of coins and tokens on your behalf based on your desired returns and their predictions. Some advantages. Reduce risk. Cryptocurrency index funds diversify investor portfolios. Holding different coins versus tokens minimizes investor exposure to the volatility of the crypto market. The logic is virtually identical to that behind the use of mutual funds. Like investing in a single company, investing in a single coin increases risk. Conversely, investing in diverse assets spread that risk around. Simplified crypto investing. Investing smartly in the dynamic crypto space requires constant attention to the market and research. Storing assets securely in cold versus hot wallets on or off exchanges and tracking their performance is also time intensive. Cryptocurrency index funds handles this much of the overhead so investors do not have to. More predictable performance. Like any asset pool, they're specialized for tracking the performance of the market and reallocating investments to maximize portfolio returns. Instead of relying on the time and resources of one person, they are an organization, presumably with a staff and algorithms that track market data. Fewer trading fees. Though they have their own fees, the larger, more active your trading portfolio, the more economical a professional service could be. Though it may not matter for infrequent investments, how Coinbase makes money comes down to their significant fees. Some disadvantages. Unique crypto index funds will have disadvantages depending on your investment strategy. For example, some may prioritize liquidity over long-term gains. Lack of liquidity. Though crypto index funds differs when it comes to liquidity, a common criticism is that withdrawing funds is not that easy. In some cases, investors have to invest in a token which represents a part of the pool. Therefore, converting those gains back into US dollars takes another step. Price. They have different levels of management, but this can come with fees. For example, Bitwise charges 2.5% in annual management fees, which can be a lot depending on the size of your portfolio. Of course, pools with less management have lower fees. Again, for frequent and high volume traders, it might be an affordable option. Barrier to entry. Crypto index funds are only available to accredited investors. This means someone who is legally allowed to buy and trade securities per SEC regulations. Specifically, an accredited investor has made over $200,000 in the past 2 years or has a net worth of over $1 million. Additionally, you have to invest a significant amount of capital to join a fund. For example, Coinbase Index Fund has a minimum investment of $250,000. These are not ETFs or exchange-traded funds, and these funds are different. ETFs work on the stock exchange and trade during the day. According to SEC announcement, ETFs provide more liquidity. Additionally, they typically have a lower barrier to entry than crypto index funds or any type of mutual fund. Conversely, index funds require less management on an investor's part day to day. The best crypto index funds at the moment. The following asset managers are the current industry leaders, and here's a little about each. Bitwise Asset Management. Founded in 2017, Bitwise was the first crypto index fund. Bitwise holds the top 10 cryptos based on their 5-year diluted market cap according to their SEC filing. The company readjusts the fund's holdings monthly and claims it stores all assets in 100% cold storage meaning they're offline. Historically, the Bitwise Crypto Index Fund has outperformed Bitcoin alone. Bitwise is technically an asset management service. It has several crypto pools within it, and these include 10 private index fund, 10 index offshore fund, and digital asset index fund. Next, Coinbase Index Fund. Coinbase launched their own crypto index fund in 2018. Unlike Coinbase, the wallet and exchange, it's only available for accredited investors and requires a minimum investment of $250,000. It has a 1% management fee, and according to their own calculations, the Coinbase Index has performed better than Bitcoin price since they launched the company in 2015. And this includes Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, and Litecoin. Next is Economy. This is a fund without barrier to entry. In other words, anyone can invest through their platform in a variety of coins and tokens. Unlike Coinbase, which focuses on a limited number of high market cap coins, Economy includes utility tokens and lesser known digital assets. And investors can select between low, medium, and high risk. Next, institutional investment in crypto. Index funds are bringing traditional approaches to investment into cryptocurrency. This means paying a management fee for a company to create a coin and token portfolio. Investors can specify risk level and what type of crypto they're more interested in. Do they prefer high market cap coins or security tokens? And how much do they want to customize their portfolio? Overall, they're for professional investors, which typically means accredited investors and people who would otherwise pay a lot in crypto transaction fees.